Welcome to another edition of Cattle Call. And Cattle Call, of course, is brought to you by Wolf Auto, small town strong, literally on location, both of us. I am at the Buffalo Bill Farm and Ranch Expo in North Platte, and Brad just happens to be at the NCBA meeting that is taking place in San Antonio. Isn't that where you're at?
Yes, that's right. I think I'd rather be where you are, actually, but
Well, I'm sure a lot of things are being discussed when it comes to the markets and the committees that you're a part of. But let's kind of dive into what you've seen in this trade. I mean, there's a little bit of an improving tone that is happening. Beginning of the week was kind of a struggle bus. We saw the way the Tuesday trade action went. Maybe we need to start there. What was the reason we saw the big drop like we did early on in the week?
Well, I think that's probably a good place to start. Yeah, in fact, I'm standing in the room where the live cattle marketing committee meeting just finished up. That's one of the committees I'm on. That's the committee that in the past we've had some real fun dialogue in here. Today was very calm, very nondescript, nothing very exciting at all. So anyway, that's all done for this year. I think too, you have to almost unpack a little bit the last couple of days, to back up here all the way to the Canada-Mexico tariff talk. The tariff with Canada was actually friendly, bullish cattle, because we take a lot of cattle out of Canada for slaughter. So when that, got backed off for 30 days, I suppose, that maybe was interpreted as being a little negative and maybe contributed to the break that we had the last couple of days. Obviously, we had a super overbought market at record high prices, and so you get those kind of gyrations a little quicker than you would have otherwise. But, when you're discounted like we are, that does help cushion the break a little bit. And I think, the Packer came out Monday with fire in his eyes. He's going to try to buy cattle lower this week. Had these low ball bids out there, 204 or so down there somewhere. And, as this morning, is moving along, while the bids are nowhere near back to where they were, they are, improving. Like 208's been bid up here, and largely passed. Feels like we're going to get, back to 210 or so to me. Maybe we'll even do a little bit better than that. So I think the improving tone on the cash market has maybe helped our futures trade a little bit. It's nice to see the rebound today. It comes back pretty smartly today.
So let's talk a little bit about that rebound. I mean, it come back, especially on those feeder cattle, to some decent, stronger trends. Is it because we've moved past it? We know that we're working with Canada. Now let's get back to business of selling cattle.
I think that's largely a part of it. I don't know. I can't speak definitively even about the Mexican border thing because that's part of the story here too, I think. But what I'm hearing down here, both in the hallway and at presentations, is that this is going to be a very soft, slow opening. Like maybe 500 head a day. Don't quote me, it isn't necessarily, but that sounds like that's the initial response. So that's by no means, some kind of an overwhelming, run of cattle here coming out of there. So I think that is part of it. And anybody that's been to a feeder cattle auction this week, the comment is the same. Well, nobody noticed the break on the futures if you've watched these cash feeders trade, right? I mean, some version of that anyway. So the cash feeder trade, the real trade, continues to trade very, very strong, huge demand, and basically not a big supply of feeder cattle being offered. And maybe a little underlying thing here with the cattle inventory report. There was really nothing very negative about that either, of course. So that's maybe got some of these longer term with the feeder cattle and the back end of the cattle market going to. One thing I thought, not to get too deep in the woods here, but one thing that I thought was interesting here on the sell-off is, being that I'm a futures guy, I watch volume and open interest. We really didn't have a significant drop in open interest on the break. I think everybody's aware that the funds are very long, right? So you worry that, well, how far does the market got to break before the funds start to come out? Well, that hasn't happened yet. In fact, yesterday, the open interest went up on April cattle where all the volume is. So that would tell me that they're still in there defending their position. So far, so good. There's things about the market that are unsettling to me a little bit. This whole tariff thing is far from gone. We're still going to haggle this thing out with China and others, Europe. The whole matter of whether you can maintain a reliable workforce in the environment of what's going on with immigration, etc., is out there as well. So I guess I keep telling my guys here anyway to be a little cautious. good time to be watching puts, looking at put options and stuff like that, in my opinion, at least. So it's, yeah, slippery slope when you're this high for sure.
So I'd read earlier in the day that they were talking about the Packers trying to get the upper hand, and they were not going to ask steady money. Where do you think we're going to sit this week? Because I know many are expecting maybe even steady to higher once again because the demand is still there for the product.
I think if we'd have done this show on Monday, it looked like the Packer had the upper hand. Leverage is what we're talking about, right? Now with futures, I think, getting the producer to bow his neck just a little bit. Maybe we can. The most I could get last week was 210. I think we're going to get back to that at least. The South hasn't really blinked yet either. We should be a couple $3 higher than the South. I think we'll probably be 210 to 212 in the North is how I feel. We'll see how dug in the Packer is. Boxes did not have a good day today, as you probably noticed. The Packers talking kill cuts, which is what he does. That's his MO when you get into these kind of markets. Both regional Packers and one major at least talking about kill cuts next week. Now, part of that is you can't kill what isn't there. And so, that's a function of tight supply. It happened in 2014 as well. But, that's an attempt, obviously, for the Packer to try to get a little leverage back.
So I'm curious, is it a little disheartening that or should we be in commodities and we expected this, that heifer retention wasn't where we thought it should be?
A little, yeah, to me, I was surprised, and I'm a little like going, geez, now we got to kill all those again this summer, right? After we've killed so many heifers the last 2 years already. So yeah, I was a little bit disappointed, but I don't know. On the other hand, it's interesting. Part of the thing that I appreciate about coming to this meeting is networking with these old guys, these other old guys, these other guys that I've known for a long time. And I can tell you that I'm getting the vibe that at least in some regions, especially the South, that there is a very real retention going on a heifer. So I think this is an evolving liquid story that we're going to be talking about. I gotta feel like nature is going to be, if allowed to, given the chance to go back to do what you love to do, which is ranching, I would think there's going to be a segment of these guys that are going to hold some heifers. We'll see. But it's a whole different deal. We're going to get used to. We're not going to have a cow herd like we used to have. We're not. Okay. I just sat through a meat presentation talking about how the size of these carcasses and the grade of these carcasses and the yield of these carcasses has evolved over time. And you're going to continue to see that. So we're going to figure out a way to produce beef, and we're going to do it with a lot less cows, it looks to me like.
Well, I'm looking forward to our conversation next week when you get back from the meeting and things that you can share that came out of those committees. Brad, obviously you're on the road today, but normally what's the best way for folks to get a hold of you?
712-722-0023 is the office number, or kkvtrading.com. I've actually run into a few people here at the trade show that say, "Hey, I watch you on Cattle Call," so that's kind of embarrassingly cool, huh?
That's awesome. That is awesome. Well, safe travels back home to Iowa, and we look forward to catching up with you next week.
Sounds good. See you then.
All right, that's Brad Kooima joining us for this week's Cattle Call. Of course, Cattle Call is brought to you by Wolf Auto, small town strong. And a quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's the Cattle Call on the Rural Radio Network.